Hi, this is Yahoo. I'm macro option trader. It's October 11, 2025, 8 a.m. Japan time. Let's take a look back at the SS market. The Nikkei closed at 48089, down 1%, but nice issuing futures fell sharply, dropping all the way into the 45000 yen range before closing. A big move. Let's go over what happens. The volatility index came in at 13.1 after staying around 28.5 to 13 for a while. So the market had been tense for days, and it finally broke through that ceiling. The PER was 18.52, and the EPS remained strong at 2596 yen. So earnings are fine, but the move clearly turned more sensitive. As for our currencies, the yen had weakened to 153 after Takaichi became eligible, but ended the week at 151.18. It feels like the Takaichi rally pace is giving way to some risk sentiment, partly driven by geopolitical and financial worries. Honestly, the nice session Prague overshadowed everything else. In the US, the S&P fell 2.7% to 6553, and the big spiked to 21.63. The move index jumped to 81.6, back into the ninth high stress zone we have not seen in a while. Gold greenback above $400, up about 1%. And this volatility index GBZ hits to 20, 27, no, 23.78, um, very high. Bitcoin dropped nearly 10% to 107,000 dollars, easing most of its recent gains. And so it since rebounded to around 113,000 dollars. Now, remember, it's 3-day weekend, both Japan and abroad are liquidating, and that always accelerated moves. In Japan, the biggest headline was a political report that the LDP Komeito coalition might dissolve. That lies doubt about whether Takaichi and new administrations can actually take shape. The market sort of had. Meanwhile, in the US, old plans Maker Fast Brands Group filed for bankruptcy. Its debt was partly held by Nikkei leasing about 210 billion yen within non-Rincho Kinko and Mitsubishi Corporation also exposed. It's not Lehman scale, but it has to growing agency about around old subprime sector, especially after trying to grasp the Last time the shock came from housing, this time the trouble is out. We have also been seeing a weaker electricity consumption, hinting that the real economy is slowing. So maybe the 3D rate cut was not just political pressure. Maybe it was a data-driven response to genius weakness. In any case, the market is finally catching up to that reality. The real question is what happens next week. Many investors still sit on the heavy unrealized gains. How they react now could set the tone. If we stay relational and the old issue is not massive, the AI boom still overweighted. Politically, break up or LDP committee block could even push Japan back toward a more core conservative line, which might later be seen a positive reset. This week was like a ping pong ball. We priced in optimism leading, then slumped in the risk at the end. Next week we'll tell which side wins out. On the global front, the U.S.-China trade tensions is heating up again. And with G20 financial meeting and APEC coming, we will get plenty of international headlines. And given the size of the nice session drop, we could see heavy selling Tuesday morning, maybe even in a mini Black Monday scenario, but it depends how far a future sentiment spill into cash. Interestingly, the cash market still closed with bullish candle, while the future printed a nasty one. The gap will decide direction. It's a tricky setup. The first year correction in one will need to watch those 10 structure risk factors and 10 economic shift we've seen tracking. That's it all for today. Thank you for tuning in and always stay along the your puts. See you tomorrow.